London economies. Thank you, Daryl. I see Daryl already started the recording, and I'm going to share my slides with you. Let me know if you can see them.
Yeah.
Perfect. So sorry, can you see the slides?
Yep.
Perfect. Sounds good. So it's widely known that the tourism sector contributes considerably to both the UK and London economies. And few events illustrate the extent of this impact better than the COVID-19 pandemic, which led to a series of restrictive lockdown measures that severely impacted on both domestic as well as international tourism to London as well as to the rest of the UK. Now, what some people don't perhaps know or are aware of is that in the UK context, the picture is further complicated by a series of challenges related mainly to the 2016 Brexit referendum, such as the ensuing political and economic uncertainty, as well as the depreciation of sterling. But an issue that's not cited as frequently is the UK's decision to end its tax-free shopping scheme for international tourists, a decision that took effect on January the 1st, 2021. So the UK ended a scheme better known as VAT-RES that allowed international tourists to claim the value-added tax on items purchased during their stay in the country. So the purpose of this presentation is just to provide an overview of the context behind the UK government's decision to end VAT-RES. So why did they actually do it? Then we're going to explore what economic theory tells us about some of the potential consequences and impacts, not just for London, but for the rest of the UK. And last but not least, I'm also going to present some of the most recent data on this issue, data that's been collected from a series of surveys, as well as by consultancies that specialize in actually monitoring and tracking data on tourist activity, tourist spending, as well as claims for refunds as a result of tax-free shopping schemes. So let's start with the context. What underlies the UK's decision to actually end the VAT-RES scheme? So it's worth starting by providing some sort of a definition of what we mean when we say tax-free shopping. So tax-free shopping refers to any kind of arrangement whereby products bought but not consumed in the country of purchase are VAT-free. So it's important if you're an international tourist and you buy a good in the UK that you don't actually consume it in the UK, that you end up consuming it once you leave. Only then would you be eligible to claim a refund for the VAT. Now, this can happen either via the product being tax-free at the point of purchase, or via the buyer having to obtain a VAT refund, like I just said, after buying it. Now, there are also restrictions on the types of goods that tend to qualify for such type of relief. The sales tax itself may be in the form of a goods and service tax, also known as a GST, or it could be a value-added tax or a VAT or a consumption tax. Now, unlike duty-free shopping, because that's something that we often hear people conflating, they confuse tax-free shopping with duty-free shopping. So unlike duty-free shopping, which allows one to buy products that would normally have excise tax on them, tax-free, and is usually found only in airports after clearing security, which is a very important but subtle point, tax-free shopping applies to the goods and service tax / VAT / consumption tax components only, and can apply to purchases made in high streets within a jurisdiction, as well as travel points such as airports. Now, what's worth noting as well is that there are several countries that implement TFS schemes. So a 2021 study, for example, by the Australian National University, found that 63 countries globally, including all of the 27 EU member states, apply a tax-free shopping scheme. And I'm going to later on mention why, the fact that the EU 27, each and every member of them, has a tax-free scheme is very important here. EU member states are required to implement a tax-free shopping scheme under Article 147 of the Council Directive of 2006/112/EC, which is also known as the EU VAT Directive. Now, going to the next slide, what was the situation in the UK before January 2021, which is when we effectively terminated the VAT-RES scheme? So the UK was governed by the EU VAT Directive until the 31st of December 2020. And so under this arrangement, if a person lived outside the European Union and traveled to the UK for leisure or for business, they were eligible for a VAT refund on items purchased in the UK. The VAT refund scheme was called the Retail Export Scheme, or VAT-RES, or tax-free shopping in colloquial terms. Now, under the UK's VAT-RES scheme, international visitors to the UK could reclaim the VAT they paid on goods that had been purchased but not consumed in the UK. Now, what happened in December 2020? Well, in a move that coincided with the end of the Brexit transition period, the UK government decided to also end VAT-RES effective 1st of January 2021. Now, having gone through the government's documents and some of the reports on that issue by HM Treasury, it's worth noting that in September of 2020, so just about 3 months before the actual decision came into effect, the government explained its rationale for ending the scheme as follows. First, it deemed that VAT-RES was not the only scheme through which WTO rules and OECD guidelines on paying tax in the country of consumption could be fulfilled. So to put it in other words, the officials didn't see any risk in ending the scheme when it comes to complying with international rules and guidelines on things like payment of consumption-related taxes. There's also a second reason, which is that the impact of the scheme across the UK was unclear, and data suggested that the majority of purchases under the VAT-RES scheme happened either in London or in Bicester Village. So according to some of the Treasury officials, this would indicate that the scheme did not benefit the whole of the UK equally. And the government, in fact, argued in its terms that VAT-RES was a costly system to maintain with unclear economic benefits and is burdensome for exit points. The third reason was that concerns were also raised by some officials in the Treasury about some of the administrative difficulties of VAT-RES. And another reason was also that, it was argued by these officials that there was a risk that fraud and non-compliance would increase if VAT-RES was extended to passengers traveling to the European Union. So these four reasons provided the sort of rationale that prompted Rishi Sunak and his government Boris Johnson and his government to scrap the VAT-RES scheme, although Rishi Sunak was also part of that cabinet as the Chancellor. Now, that being said, it's also worth noting that VAT-free shopping is still available in cases where a retailer ships goods out of the country at the time of purchase. However, this also raises questions of convenience about whether such an option would be problematic or would inconvenience tourists, would still have to wait until the retailer actually ships the good out of the country and then receive it and then apply for a certain type of refund. At a time when most tourists obviously shop whilst they are physically present in the country, and therefore the previous scheme would have made it much more convenient for them to claim the refund there and then the moment they decide to leave the UK. So in addition to why the government actually took this decision, it's also worth noting that the government did an estimate of the economic impacts of terminating VAT-RES. So when forecasting the impact of terminating the scheme, the OBR, or the Office for Budget Responsibility, said that VAT refunds worth about £500 million had been given via the scheme in 2019. It did also note, however, that while terminating the scheme would generate revenue for the Treasury, it could also lead to reduced shopping by international tourists, especially for luxury items. And I'll emphasize later and focus on this point of why luxury items in particular are important, and of course the impacts it could have on reduced shopping. The OBR forecast that terminating VAT-RES would generate a £1.8 billion saving to the Treasury by the 2025-26 fiscal year, whilst of course adding the caveat to their report that the figures are highly uncertain. Now we're going to see why this is important when we try to look at the potential adverse effects of terminating VAT-RES and how that compares to the so-called £1.8 billion saving that the Treasury projected. So now let's look at some of the potential economic impacts and consequences. Now, it's worth noting here that a key challenge to the OBR analysis, which is something that's typically highlighted by opponents of the government's decision, as well as other economic forecasters, notably Oxford Economics, is that the work did not examine the impact of tax-free shopping schemes on retail expenditure and its broader multiplier effects. So for those of us who work with economic analysis and data every day, we know that decisions of such magnitude tend to reverberate beyond just direct effects on the sector which they impact, in this case, the retail sector. The impacts go beyond that to affect other sectors of the economy that are integrated to the retail sector through a network of complex supply chains. And so the work of the Treasury and the OBR did not factor any of this into account, such as the fact that increased economic activities in other sectors would lead to more tourism, would lead to more job retention, and potentially to the creation of new job posts. Now, just as an example, Oxford Economics modeling of the decision's impacts suggests that the reintroduction of VAT-RES will have a significant positive effect in terms of GDP, tax yield, and job creation. In fact, they project that those impacts far exceed the £1.8 billion saving. They project something along the around £4 billion in terms of potential benefits of reinstating VAT-RES. Now, it's in terms of what economic theory has to say about all of this, it suggests that tax-free schemes boost retail spending by tourists. And there is, several studies that are done on this for jurisdictions outside of the UK and as well as outside of Europe. By extension, the increase in any consumer spending as a result of the tax-free scheme would increase that country's GDP, would stimulate job creations, and that would extend beyond just looking at the very shops within the retail sector to include tourism, hospitality, anything that in fact forms part of the broader supply chain for producing some of the items that tourists would buy. And you could imagine that would be anything from food to luxury items. But it also goes beyond just looking at the locality that we're focused on, which is in this case London. It would also impact positively on other regions and other parts of the UK economy. Now, as the UK ended its VAT-RES scheme relatively recently, we are talking about the decision coming into effect in January 2021, data on the effects of this particular decision is relatively limited. Moreover, there is the COVID-19 pandemic's impact on global tourism, which complicates the picture. Nevertheless, GLA Economics recently received data that would suggest that the UK is losing out economically to rival jurisdictions as a result of this decision. Now, theoretically, the case for the detrimental impact, and thus the case to reinstate tax-free shopping, can be divided into several categories. And I've listed those in this slide that you can see. Ending VAT-RES, for example, would divert tourist spending away from the UK towards, obviously, countries that do have their own tax-free schemes, such as the EU, as well as other destinations. So that would obviously lead to foregone Exchequer revenues. Now, in terms of some of the details to mention about this, it's worth noting that higher income tourists tend to be very conscientious shoppers who are price sensitive. So other things equal, they would actually visit and shop in jurisdictions that offer a tax refund. So that's something very, very important to note, which recent surveys have even demonstrated, that we are talking about relatively high net worth shoppers and people who come to shop for certain items that are luxury, and therefore they have what we would call in economics relatively high price elasticity. which means we're talking about people who are very, very sensitive to anything that would raise the price of an item in one jurisdiction compared to another. And therefore, you would expect them to be very, very cognizant of this and to take this into account. Now, another thing to note as well is that exchange rate movements cannot explain the reduced tourist shopping to the UK since 2021. And just to give you an example, Chinese shoppers tend to be a sizable constituency. And the Chinese renminbi, for example, weakened from 2019 to 2023 versus a variety of currencies, such as the euro, as well as the dollar. Now, at the same time, the American dollar, the currencies of some of the main international tourist shoppers in the UK, such as the UAE's dirham, or the Saudi rial, or the Singaporean dollar, remained virtually at the same level compared to the euro. And so exchange rate movements cannot fully explain the reason for some of the trends that I will portray and present to you later. Now, there is also the fact that UK shoppers are starting to take advantage of the EU's tax-free shopping scheme. So remember, I said that all the EU 27 member states have their own tax-free schemes. So what's happening now is that we are seeing UK shoppers taking advantage of the tax-free schemes in those countries to shop in the European Union instead of the UK. Now, the UK shoppers are, of course, entitled to claim tax refunds if buying items in Europe, and that would save them money. Now, there's also the fact that you have lower tourist spending in the UK right now, which harms the broader tourism economics ecosystem, not just in London, but also across the UK. Naturally, tourists do not only spend money on luxury items and retail when visiting the UK, they will stay in hotels and they will eat at restaurants and they'll visit attractions. So all these amenities will experience a drop in their revenues as a result of the lower tourist spending. Now, last but not least, there is what we would call in economics induced effects. That is to say, effects that go beyond impacts on the retail sector directly or impacts on other sectors such as tourism indirectly. These effects go towards, the reduced income that people would now have as a result of lower growth across the whole of the economy. And this would impact on things such as consumption and investment across different elements and components of the UK economy, not just London's. And so what we would see is that lower tourist spending would lead to employment losses across the entire supply chain, and it would drive international brands out of the UK. Now, it's also worth noting here that supply chains to manufacture goods in the UK tend to be integrated across multiple industries, and they're also spread across different regions of the country. And so lower spending in one sector would likely impact other sectors and regions. Moreover, economic theory demonstrates that higher taxation and bureaucratic red tape deters long-term capital investment by businesses. And later on, I'll cite the example of Mulberry to show that that's already starting to happen. So other things equal, this would undermine business expansion, job creation, and by extension, economic growth in the long run. Finally, it's also worth noting that by ending VAT-RES, the UK is actually going against the large majority of fellow OECD countries. So 32 out of the 38 OECD countries already have a VAT refund scheme in place. And there are others of the remaining 6, for example, Canada, which is strongly considering introducing its own scheme in the near future. So for an economy that is reliant on tourism and hospitality, the UK risks disproportionately damaging itself as a result of adopting the very opposite approach. So with all that in mind, let's go through some of the recent data trends. I'll start by reflecting on some of the data shared with us by a consultancy called Global Blue. Now, Global Blue is the world's largest strategic technology and payments partner within the tax-free shopping, payment, and retail tech ecosystem. And according to their latest data, the recovery in tourist spending during 2022 versus pre-pandemic trends has been much more subdued in the UK than it was in France, Italy, and Spain. Looking in particular at spending by international tourists who come from the Persian Gulf, you will see that the GCC tourist spending in these EU countries is at least 1.5 times their levels in the pre-pandemic, but it's currently less than 0.7 times what it was pre-pandemic for the UK. So we're seeing a significant difference in terms of trends pre and post-pandemic in the UK compared to other EU jurisdictions. Now, Global Blue data also shows that almost 10% of UK spending in 2019 has already been relocated to the EU 27 by international shoppers. Meanwhile, non-EU/UK shoppers who used to shop in the UK and EU 27 in 2019 have actually increased their tax-free spending in the EU 27 by nearly 30% in 2022. Now, on that point as well, it's worth noting that Chinese tourists typically represent about 22% of tourist spending in the UK on an annual basis. And in a recent survey also commissioned by Global Blue, the UK was shown to be the least favorable destination for Chinese tourists among the large 5 European countries for their future trips. Furthermore, only 42% of Chinese people planning to visit Europe in the next 12 months are actually planning to visit Britain. Now, that is down from over 70% back in 2019. So we're talking about a very significant constituency of international tourists that has already reacted adversely to the ending of the VAT-RES scheme. Now, as you see in this slide that I've been projecting, we're seeing that UK residents are increasingly starting to take advantage of EU countries' tax-free shopping schemes. Approximately 500 million euros were spent by UK shoppers in continental Europe back in 2022, last year. Now, just to put that in context, this represents an increase of about 200% compared to 2021, where the UK shoppers spent around 160 million pounds, or about 175 million euros, only the year before. So that is a staggering increase as a result of the UK shoppers wanting to take advantage of tax-free schemes in Europe. Now, we also received data from Value Retail, which is another consultancy that deals with retailers, big players in the tourism sector and in the retail industry. And Value Retail shared with us an interesting anecdote about the Dorchester Group. So for those of you who may not know, of course, they are the group that owns the Dorchester Hotel in London, and they also own a similar property in Paris. And so apparently the Dorchester Group has just announced that its London hotel is underperforming its Paris hotel, which they attribute purely to the end of VAT-RES. So according to the data they collected, they see a clear difference in trends since 2021 compared to what the situation was before January the 1st, 2021. Now, Value Retail also provided us with anecdotal evidence from Mulberry. Mulberry, for example, just announced the closure of its Bond Street store due to the ending of tax-free shopping. So that's another company that is now starting to realize that reduced tourist activity in the UK as a result of the ending of VAT-RES disadvantages its business in London, and therefore has decided to reduce its activity in the city. Now, I mentioned earlier that the UK unfortunately finds itself as a black sheep amongst OECD countries on this issue. But before going into this particular topic, it's worth also noting that we also received information from the new West End company, which shows that 57% of all West End spend was international in 2019. But this percentage actually drops to 44% in 2023. They also noted that 71% of their international visitors said they would spend more if they could claim back VAT on their purchases. Now, that's a staggering number. We're talking about nearly 3/4 of international visitors. But what's even more interesting is that if you look at the highest spending international tourist customers, that proportion increases from 71% to 93%. So if you remember my point earlier about high-end and high-spending international tourists being the most conscientious, being the most cognizant about price variations, well, you see here why. The overwhelming majority of them would consider shopping more in the UK if VAT-RES is reinstated. And to that point, this brings us to this slide, which is the UK being a black sheep amongst OECD countries on this issue. So I mentioned earlier that only 6 of the 38 OECD countries currently do not have a tax-free scheme. But even amongst those 6, there are some that are considering introducing their own scheme soon, Canada being an example. So on that point, the Canadian government, for example, commissioned a study by CEBR to forecast the potential economic impacts of introducing a VAT-RES scheme in that country. The study revealed that such a scheme could have increased the country's 2019 GDP by approximately $800 million. So we are talking about just under £500 million. Now, in terms of the labor market benefits, the boost to visitor spending as a result of introducing such a scheme would support an additional 32,100 jobs in the travel and tourism industry, as well as the supply chains linked to that industry. Now, this would bring a potential net gain of just about 80 billion pounds in 80 million pounds in overall tax revenue. Now, equivalently, for each dollar loss as a result of the lack of VAT or revenue generated as a result of scrapping the scheme, an additional $1.90 would be recouped in other taxes. In other words, the benefits, just numerically looking at, comparing the cost of not having that tax revenue as a result of the scheme versus the revenue that you would generate as a result of having the scheme in place, you would see that the revenue way more than offsets the dollars lost as a result of foregone tax revenue. Now, the estimate of total additional tourist spending due to the tax-free shopping scheme would be just over 400 million Canadian dollars, which translates to about 270 million pounds. So we're talking about relatively large impacts, not just on GDP or GBA, but we're also looking at impacts on employment. We're looking at impacts on multiplier effects and future tax revenue, things that Oxford Economics, to their credit, have modeled and considered when looking at the impacts of ending VAT-RES in the UK. However, unfortunately, the OBR modeling, as well as the Treasury's analysis of this issue, did not even tackle any of those potential long-term effects of that decision. Finally, I also wanted to reflect on, what some of the international tourists from the EU itself think about VAT-RES. And for that, I'm happy to say that our colleagues in London and Partners recently shared with me the findings of their Let's Do London survey for 2023. And as part of that survey, London and Partners also asked a sample of French and German tourists questions about the UK's termination of VAT-RES. And it's interesting to note here that just under 2/3 of French tourists and just about half of German tourists surveyed, and we're talking about a sample of over 10,000 people in total across the two countries, thought that having a tax-free scheme influenced their decision to visit London. Moreover, for those who actually intend to travel within the next 12 months, 61% of Germans and just under 3/4 of French tourists thought ending VAT-RES would influence their intention to visit London. Now, what's also more striking is that London and Partners have data that decomposed the responses to these questions by the age of the tourists, by their income levels, and not just by their travel intentions. And what we would see from the data is that the trends do not change, virtually don't change at all. In fact, I know I say they don't change significantly, but they virtually don't change whether you look at the tourist's age or whether you look at income levels. So whether you're talking about relatively affluent French and German tourists or those who are not as affluent, whether you're looking at people who are relatively young or pensioners, the trends and the figures remain broadly similar in terms of the intentions of these tourists to visit London and the effect of ending VAT-RES on their intention to actually come and shop in London and the UK in general compared to other destinations. And so with that in mind, just to summarize in terms of final considerations, it's worth noting that during 2023, several media and retail-led campaigns were started already in the UK to reinstate VAT-RES. Now, for example, in August, there was a campaign by the Mail on Sunday that stated that 350 brands, including Harrods, Marks and Spencer's, Burberry's, and Harvey Nichols, had backed its campaign alongside 40 Conservative MPs. And it's also worth noting that should the UK reinstate VAT-RES, it would become the only major European country where EU residents could shop tax-free, opening up a whole new market for regional airports and the areas they serve. So that's a very important point, because at the moment, the UK is not distinguishing itself from other EU countries, even though it has left the European Union. But now that it's left the EU, it is in a position to reinstate VAT-RES, which means that EU tourists who normally would not be able to claim a refund if they go to another EU country, well, if they come to the UK and the UK reinstates the scheme, then they could claim the refund in the UK. It puts the UK in a category of its own amongst other European countries, or the broad majority of European countries. It certainly would be the only major one where this would apply, and that would open up so much activity, so much business, not just for London, but for regional airports. Think in places like Manchester, for example, or elsewhere. Therefore, it's safe to suggest that the impact of terminating VAT-RES extends beyond just a few London-based luxury retailers like Harrods and like Burberry's. It will negatively affect a broad range of London's business population and workforce, in addition to suppliers and manufacturers across the whole of the UK, with long-term economic costs and consequences that would far outweigh any short-term accrued savings as a result of the termination of the VAT-RES scheme. And with that in mind, I'm happy to take any questions you might have on this issue. Thank you very much. By the way, just to say, I'm happy to share the slides with anyone who would be interested in them. So,
yeah, just to say the slides will be available hopefully later on today or tomorrow online on the intranet, together with the recording.
Sounds good. Any questions or comments? Lauren.
Hi, Adam. Thank you for that. So not a question as such, but more of a comment, and to try and encourage maybe others to raise their hand. But I just thought that was super interesting. So thanks a lot for sharing. And just to say that us in the business engagement team, we've been engaging with a lot of businesses, business groups, and other partners that have been impacted by this. And have coordinated lobbying activities on behalf of the mayor on this issue as well. We've sort of signed a letter to the Chancellor and regularly keep in touch with some of the sort of key affected parties on this. So if there's any sort of intel we get, we'll share along to you as well, Adam. But that was a super interesting presentation, so thank you.
Yeah, thank you, Florence. Yeah, definitely. We should talk. It's because this issue will continue to feature in, and I'm sure probably as well that the Deputy Mayor for Culture is very interested in that. And so we're trying to update our evidence on this issue as well through information, whether from London and Partners or other stakeholders. So definitely worth staying in touch, and I'll be happy to share any information you might be interested in on that.
Great, thank you.
Ben.
Thanks, Adam. Just as on the presentation, really interesting. I just wanted to ask a quick question about you said about London and the Dorchester Group and quite really interesting sort of London-centric issues. But are you seeing as well that other regions in the UK as well are flagging this as a particular issue? Just any other sort of cities like Manchester or Liverpool or others?
Yeah, no, it's an excellent question. And yes, to answer your question. So I basically didn't touch on it perhaps in so much detail during the presentation, but a lot of the anecdotal evidence that we got and the accounts that have been recorded by consultancies like Value Retail and the New West End Company also mentioned that, to my point on supply chains being so integrated across the UK, what's ended up happening, for example, is that if you look at Harris Tweed, for example, that produces some scarves and some clothing materials, they have a lot of factories and places where these products are actually produced in places like the Midlands, as well as all the way in Scotland, up in the north. And they're seeing already job losses because there is less demand for Harris Tweed products from tourists. And so what's ended up happening is that there's already been job losses in Scotland as well as the West Midlands as a result of that. So that's just one example. And I'm sure if we also go beyond that and look at other producers of items that may not necessarily be as luxurious, then we would also see that there have been some kinds of losses across the whole of the supply chain, given how broadly distributed it is across the UK and across multiple sectors of the economy as well.
And just on this follow-up, if that's okay, you were just saying about luxury items. It's interesting you were saying earlier about particularly tourists with high incomes, being the main kind of demographic you're looking at. But are you also seeing those on like lower incomes as also being sort of negatively impacted by this, or is it more of a sort of a high-end shopping element?
Yeah, so that's a very good question. What we're seeing is, if you look at the data we have now on non-EU tourists, so look at China and people from the Gulf, also from the United States to a lesser extent, the focus has been more on looking at the behavior of relatively high income affluent shoppers, because those tend to be the ones that spend the most income when they come to the UK or other parts of Europe. But if you saw the survey from London and Partners, where they looked at just the French and German tourists, the results hold irrespective of age and income level. So those who were surveyed could have been, earning, over six figures per year, but there have also been people surveyed who were relatively on the lower end of the income scale. So it's actually a very interesting point for us going forward, is to see, well, what about non-EU tourists who perhaps aren't as affluent and who visit places like the UK or other parts of Europe? Have they also been impacted by this, and to what extent? But I mean, I would suggest that the impact would be similar across the board as well. I mean, we're seeing it for the tourists from France and Germany. I don't see any reason why the trends would be so different for tourists from places like China or the United States. So.
Thank you. Really interesting. Thanks.
Maliha.
Yes, thanks, Adam. More of a kind of observation rather than a question, but I think my only experience of this has been where I've spoken to kind of friends or family who might be visiting different places or London. And I think the thing that puts them off is potentially long queues at the airport in certain places, and as a way to get your tax refunds. And I guess I'm wondering, thinking about also how you capture kind of different income groups, are there kind of other ways to incentivize people or have mechanisms to capture more people that make the process a bit easier? I wonder if there's research around that in terms of, I guess, the opportunity cost of waiting in line versus the amount that you might save.
Yeah, no, that's a very good question. And to be honest with you, I haven't looked into that at all, because the way it works in the UK is that there's always been that same scheme where I think now in certain airports, there is actually kind of kiosks where you can digitally do it. So I don't know if, whereas before, you'd have to go manually and you'd have the receipts and I think and you'd have to hand it over to whoever the official is there and claim your refund. So I actually don't know if now with everybody obviously is jumping on this drive to digitalize everything, if that's making things easier or not. But there is a case to be made about, I mentioned in the first part of the presentation that there's different types of VAT-RES scheme and different ways you could claim it. So it would be interesting to do a study on, well, even if the UK does decide to introduce a similar scheme in the future, should it be similar to VAT-RES or should it be done differently and structured differently? And we're not even just talking about processes, but the actual design of it. So I don't think it's been done so far, but definitely it's given me food for thought.
Thanks.
And let me just check so there is a few comments on the chat, so I'm going to go through them. Vivian says, is it just spending that hasn't recovered to 2019 level compared with other major countries, or is the appeal of the UK suffering more widely? So I focused on spending in general, but to be honest, for some of the data, we also received data from a couple of other consultancies. I didn't mention one of them being Planet. It's called Planet Consultancy. And they tended to detect that there is just a broader lack of appeal to visit the UK, especially now that the UK is not part of the European Union. But I would say that the spending effect is the one that is most visible and most dramatic given the numbers, which is why it's the one that I tended to focus on in this presentation. You also mentioned you've been told informally by former colleagues that HMT are unconvinced about analysis multiplier effects these days. Yes, because the deputy mayor, Justine, and I are involved in some of those conversations. They remain unconvinced. And so you ask, could this be partly behind their approach and why they didn't consider it? Yes. Ideologically, HMT is just not a fan of multiplier effects, even when it comes to things like appraisal and evaluation. I don't know why. It's something that's accepted by other jurisdictions, other OECD countries, but which is why now we're starting to see a bit of traction in terms of them being convinced that perhaps reinstating the scheme is a better approach. But the only reason they're starting, and I say just starting to change their mind on this, is because we're now reframing the argument differently. So we're going beyond just talking about multiplier effects to actually look at damage across the wider UK, damage to supply chains, as well as damage to spending in other parts of the UK, not just in London and Bicester Village. And I think the other thing that's prompted a bit of a shift in their thinking is the fact that UK shoppers are starting to take advantage of tax-free schemes in Europe. So these two things have prompted a bit of a rethink, which we're hoping snowballs into eventual change. So let's wait and see. I think there's a comment from Kate that says, I understand the point that this decision has reduced economic activity, but how desirable is it environmentally to encourage high net worth individuals to fly to the UK to consume luxury items? Have environmental costs been built into the modeling? Very good question. And no, unfortunately, that particular modeling, whether it's done by Oxford Economics or CEBR, doesn't look at the net zero implications of encouraging just more tourists in general, but especially high net worth individuals to fly to the UK. It's something that they should consider, especially given the mayoral priority to achieve net zero targets by 2030. So if there is interest going forward to do anything at the London level, I would imagine the environmental impacts would have to be taken into consideration when doing any kind of cost-benefit analysis. Daryl asks, have you done any work on the UK introducing a tourist tax? Thinking here on taxing hotel rooms. No, I haven't, and it's not something I think that that we are looking at in the GLA in general. I don't know if it's just immediately as a result of what's happened in Wales when they introduced a tourist tax. I actually don't know. But it's definitely something that might resurface in the future. But for the time being, we haven't done any work on this. And I don't think there is much of an interest in the near future to look at this.
Yeah, the reason why I asked that question, Adam, is just because of there's a very sort of tight situation with regards to money and spending. And I think obviously that's why the Chancellor of the Exchequer, I think it was supposed to come in under quasi-Kwarteng. I think they were going to scrap the tax-free shopping thing, and sorry, reintroduce,
Reinstate it, yes.
You reinstate it, and then Jeremy Hunt scrapped it. So I was just thinking, just in terms of balancing that, because obviously people are worried about the loss of revenue. Introducing a tourist tax might balance that out. So it's really political, really. Is more the sort of question there. But
yeah, no, I mean, you're right. I mean, a lot of this is politics as well. So to give you an idea, the discussion that, you know, Justine, our deputy mayor, had with the SPADs from Treasury, initially the reaction was, well, why would we want to reverse a policy that would primarily benefit foreign tourists? That was the main concern for them, is that the optics of it would not look good. That at a time when we're having a cost of living crisis, here we are giving a giveaway, if you like, by reinstating tax-free shopping to rich tourists from, you know, from elsewhere. But obviously, this is a very narrow-minded view of the whole idea of tax-free shopping in general and why it should be in place. But it's as much a political decision for me what happened back in December 30th, 2020, as it is economic, because the economic case for it is very weak. So for me, it was primarily the politics that was the key issue, why they, number one, decided to terminate it, and number two, why they're reluctant, at least until very recently, to even think about reinstating it again.
Thanks, Adam.
Yeah, no worries. Any other comments or questions?
There was just a question from Camelia there in the text about any further questions.
And I just added my email, so I'm very happy if anyone has
great.
any questions or anything on this issue, or is interested in seeing what happens, you know, going forward. You know, please reach out, and I'll be happy to have a discussion with you. So. Cool. If everyone is happy and there are no other comments or questions, I want to thank you very much for listening to me today, talking about a subject that, like I said, is not something that we typically talk about, but thank you for listening. And yeah, always happy to answer any questions you might have on this in the future. Thank you, everybody.